Engaging with the next generation of investors doesn't have to be hard. Our next guest works every day to make these conversations actually easier and inspiring. And it all starts with understanding the needs, the goals of investors who are just starting out. How does she engage with the next generation of customers and inspire them to do more with their money? And what are some of the exciting tools and insights that Fidelity has to offer to make these conversations flow a little bit more easily? Fidelity U.S. Senior Vice President of Emerging Customers, Kelly Lannan, joins us now to dig into these questions and share some of her communication tools for the next gen of clients. Hi, Kelly. Welcome. Great to see you again.
Hi, Pamela. So nice to see you, and thank you so much for having me back. I always love being part of these conversations.
Well, you bring an awful lot to everyone here today, so we're delighted to have you. And for everyone joining you here today, do send your questions in to Kelly over the next half hour or so, and we'll put as many as we can to her. I'm curious because you have this line of communication with a different demographic in some ways. If this particular week has actually been a time when there's some real engagement from younger investors, because they must be thinking, maybe I need to go to Fidelity and find out what the heck's going on with markets. It's been quite a week.
Yes, it has been quite a week. And we do see, and we do typically see this in periods of volatility, that this is a time when, and listen, people should always be paying attention to their finances, but we know that these market events actually cause people to pay even more attention. And we actually see the amount of our younger investors who are logging in, coming to Fidelity, either to check their balances or look to us for guidance, greatly increase. Now, this happens across the board of all different ages. And, we see this actually as an opportunity, as well as our responsibility to, when we are seeing our next generation of customers come to Fidelity, logging in, looking for advice, guidance, or just reassurance. That's what we're here to do. So a lot of times during this week and during this period, we make sure as we're logging in, we're providing education, we're providing words of reassurance, we're pointing individuals to their advisors or someone to speak to if they do want to do that. It is our job at Fidelity to make sure in those periods of doubt, in those periods where the markets are going a little bit wonky, we are there to support our clients throughout that, because that's often when they need us most.
And do you find, we're gonna go into actually exactly how you do some of the communication in a second, but do you find at moments like this, and maybe generally, that those who are starting out in their investment world, maybe at moments like this, do they just want a little bit of info, or do you find actually they're quite open to getting some real depth of knowledge from Fidelity?
Yeah, I think what we've seen is it's a mix, and that a lot of times that does translate to how they like to work and communicate with us in the first place. There is definitely a percentage of individuals who they just need that small bit of insurance, right? Reassurance. They just need a little bit of assurance knowing that, hey, this happens. We have your back as Fidelity. We have your best interest in mind, and it's going to be okay. These tend to be the individuals that are a little bit more engaged, a little bit more savvy, and candidly are a little bit more confident in themselves when it comes to investing. Now, for those who are more starting out, those who are a little bit more novice, who kind of feel as though they lack the confidence even to begin with, and not to mention in periods of volatility, they're the ones who we've noticed, they're the ones who want to go deeper. They're the ones who need that additional education. They need that additional support in order to make themselves feel okay about what is happening around them. They're sometimes the ones who do pick up the phone and give us a call. They're the ones who use kind of our digital chatbots to communicate with us. And that's the beauty of a place like Fidelity, is that we have the available to help you digitally, as well as we have the availability to give you a person to talk to in case you need that extra assurance.
Fascinating. Okay, you're based in Boston at FMR.
Oh, yes.
How's Boston right now? It's kind of rainy here, actually. We often
I think we were actually supposed to get. I'm looking out the window. I see sun. Okay. Pamela, and I woke up. There was some rain. I thought we'd have a lot more due to the storm. I hope everyone out there is okay. But we have a little sun pop peeping out, which is good.
That's good. That's good. Yeah, long may that last. Here we've got a bit of a drenching day.
I'll send it your way.
You send it
your way after this.
Blow it up.
Yeah.
Brilliant. Tell us what you do in Boston. Describe your job a little bit to us. It was, a new creation, bit of an innovative job. What do you do sort of on a day-to-day basis?
Yeah, I get this a lot. We have about 1,300 interns in the building, and that's what they ask me each and every day. What exactly do you do? So I'll first start out. I'll first start out, by sharing. This is an industry where sometimes I surprise myself that I ended up in it. I'm someone who never really grew up loving the math and the numbers. I'm someone who saw all the dads seem to go to work in financial services and never the moms. And so, Pamela, I have to admit, I never really thought that I was fit for an industry like financial services. I actually ended up going to school. I was an ice hockey player to all my fellow Canadians
Cool.
out there. I have a lot of friends actually up in Canada as a result. So I spent a lot of time up there. So I went to school to play ice hockey. And, when I graduated, I kind of had the moment where I was like, oh my gosh, like what was I learning in school? I know I was playing a lot of hockey, but why didn't anyone teach me kind of these financial basics? And I realized soon on that in order to live the life I want, and really what I mean by that is in order to know how to budget my money, pay bills for the first time, understand the impact of credit, what is a retirement plan, and how can that help you for your future, as well as candidly still have fun, and go out on a Friday night with your friends. Like I needed to take control of my money. So I ended up going back to business school. I met a lot of other people from this industry who also worked in finance, a variety of positions. And I just correlated in my mind is that's the industry I want to be in, right? And so that's how the job came about. I got into Fidelity. I kind of looked around. I realized that, wow, this is a cool company. Young people work here. And more importantly, we can help younger people. So that's translated into the job that, put quite simply, I really help hopefully inspire and get more young people to engage when it comes to their money. We believe at Fidelity that everyone should and can be an investor. So part of the job is helping to acquire net new young clients into the firm. And more importantly, once they're here, deepen, engage, grow that relationship over time. We are a firm, Pamela, this is what you do every day too. We are a firm that wants to help people live the life they want through all sorts of life events, and we can do that at Fidelity. So that's a big, important part of the job as well.
Yeah, very inspiring. It's really interesting to sort of hear about that. So when you're attempting to create sort of a critical mass of a younger generation coming through the door, tell us a little bit about let's begin with the tools. Like how do you talk to people initially? I mean, the goal is to get them through the door, I guess. So just talk a little bit about the tools you use.
Yeah, so that's a great question. And let me just take a step back. I'm sure there's folks on this call being like, am I young? So how we consider young at Fidelity, what we're looking at from a pure business KPI standpoint is those who are really under the age of 36, so 35 and under, which now includes teenagers. Now, as you're listening to me, I'm sure like, oh, geez, I was 13-year-old. I was nothing like I was a 25-year-old. At 25, I was nothing like I am at 35. So, and we know that and we recognize that. So your question, how do we best engage them? Well, first we have to understand the different segments in that generation that we're going after. This also spans two generations, right? We have the millennials as well as Gen Z. And so when we understand the different segments, different ages, and candidly what their needs are and what's important to them, that really helps us understand how we can best serve them. How we initially engage them is we know that we have to show up where they are. So a big part of our strategy from a marketing lens is that if we know that individuals are out there on things like social media and social channels, we have to be there too. Not just in order to acquire and help them become a Fidelity customer, but candidly, I see that as our responsibility to show up where they are. We are the subject matter experts. We have the education, we have the tools and resources. So if we're up there, as well as with all the financial influencers, I'm turning to Fidelity for help. So that is what we feel like is our responsibility. Another really important way that we start to engage people, especially for those who do skew a little bit younger, or heck, I'm almost 40, like I still turn to my parents, is through the parents, right? So another really important way that we know to engage our younger customers, our younger prospects, is we got to talk to the parent. And Pamela, I don't know about you, like I know that parents are looking for just as much advice and education as their kids are.
So that's exactly what I wanted to ask you. Like the parents in some cases will be, okay, a bit older than the 36, but still very much probably in some cases learning and interested. And yeah, how do you kind of, you got a whole bunch of generations actually of investors, sometimes all within the same family.
Yeah, so the family conversation is particularly important. A few ways we do it. One is that, yes, we spend a lot of time creating educational content for our younger investors. We spend just as much time creating educational content for their parents, for the trusted individuals in their life that candidly they're actually turning to before they go onto any sort of social site. They're going.
That's surprising. I mean, I find that just really interesting, actually.
Yeah. Hey, and now don't get me wrong. They're still going to TikTok. They're still going to our social platforms in order to get their information. But either before they do so, or while they're doing it, or after they're doing it, they're coming to the trusted people in their life, that their parents, their close family members, their grandparents, and they are looking to them for advice. And, we've been through and we built a variety of products and we bring people in, right? We test with people. We bring parents, teens, those who are older into our labs. We talk to them. And all these parents are like, oh my gosh, please educate my teen. And then they pull us over and they whisper to us and they're like, please make sure you educate me too, because they don't have the confidence, to educate and talk to their kids about this. And Pamela, we are such big advocates of the conversation. When we, Fidelity, cannot be in the room, we want the parents to be able to have the conversation at the dinner table, on the way to soccer or hockey practice, or if the kid is checking in from college and university and trying to talk to them. So we feel like that is also a responsibility. And one more thing, and then we can move on to the next question. Another big area is these parents, they have existing relationships with Fidelity advisors. And so another big thing too is that we want to make sure that the advisors, the trusted Fidelity contacts, they're also talking to this with their clients. They are armed with the education to give their clients, and they are telling their parents, they are telling the parents to make sure they're having the conversations with their kids. And in some respects, and we've seen this, in the US, I'm sure you've seen this in Canada, we've seen a lot of parents, grandparents, turn to their advisors, turn to their Fidelity content and say, how can I better help my kid? And it's sometimes we're seeing the kids, they're being brought into the investor centers, they're being pulled in conversations. And that's a really good thing because that's how we can start to develop the relationship with the advisor as well.
How young? How young is young?
Let's
go to like the research that you've done on lots of different young investors, but some of them are really young, right?
Yeah. And so a big focus of ours actually right now is teens, right? So those under the 18 years old. Now, there's always been in place accounts, custodial accounts that are open really on behalf of the child, either for education or other, expenses, healthcare, et cetera. So that's always been a big part of our strategy. But never before, Pamela, have we actually created something specifically for the teenager. One example of an innovative project and innovative product that myself and my team built over the past couple of years is something called the Fidelity Youth Account. What's really great about this product is that the account itself, it's actually in the teen's name. The teen is the owner of that. And what I mean by that is that the teen is in the driver's seat to make the investment decisions. So it's not a parent, grandparent, aunt, uncle choosing and making the investing decisions on behalf of the teen. It is the teen actually choosing what securities to buy, what funds to purchase, how to research. Now, this is learned by doing to the max, and we fully realize that. So the parent does have to be involved. The parent is an authorized user on the account. They have transparency into what their kid is doing. They have transparency and they're able to see and transfer money into that account. There's also education for the parent as well, so they can have these conversations. And so that's the account. And just at the end of last year, we actually created the Fidelity Youth app experience, which is another channel for that account to live in. And this is something we directly created with the teens, with the parents in mind. Like I said, we brought them into the research, we brought them into the conversation. We asked them, what do you want in an app? How could we best engage you? And so we created an app that helps them invest, helps educate them. They can learn some money when they go through the education. The parent has their own parent portal and experience that they can see. You can transfer money between the parent and the kid. And so we took a step back and said, hey, the account's great. It's a great way to get them in the door. But then going back to my previous point on what I do, how do we deepen? How do we engage? And how do we get them to keep coming back? The fact 13-year-olds are investing in their money, that's amazing. Like, Pamela, wouldn't you wish we did it? Like, what were we thinking? You know what I mean?
Absolutely. I mean, 13 is young. And when you look at, say, a 13-year-old, 14-year-old, whatever, but does it grow? And then, at 17, there are many more 17-year-olds, for instance, and 13 sounds young. Or is it?
Great question. So what we're actually seeing is that there are just as many 13-year-olds investing their money in the stock market as are the 17-year-olds on the youth account. That's amazing. We are seeing just as much engagement in that age range as we are on the older end of the age range. And then once you actually turn 18, the account doesn't go away. In fact, you quote unquote graduate into the broader Fidelity. In the U.S., the account transforms into a brokerage account. And then again, you're well on your way to continue to invest in your future.
Okay, so let's go with that, because that is the piece of obviously retaining them. So there's the initial piece of how you find some of the people. Actually, before we go to that, can I ask a bit about when you do research, for instance, where do you find people to help you with it? It's a research study. I mean, biotech companies do research studies, and lots of marketing firms do it. Like, where do you find a critical mass of people to put some of these questions to and learn back from?
Yeah, so we actually have two populations that we really look at. The first is we use our own people, right? We
Yep.
use our own employees. We use our own employees who are younger that we're designing for. We also use parents and grandparents, and we bring them in and we talk to them and we ask them, how can we better help the young people in your life get started? How can we better help you get started? Because if our own Fidelity employees are having difficulty get started or they don't know what to do, then we know that those outside our walls will probably have difficulty as well. But we also know that because one works at Fidelity, they're educated, they're in financial services, they do tend to be a little bit more savvy, not necessarily truly representative of the overall population. And so we also work with our research teams. We have teams at Fidelity that they obsess over this, right? They obsess over research, learning, testing, and they're some of our best partners. And they are actually the ones that look outside Fidelity. They help recruit individuals that are in our design target. They sometimes work with other vendors to do so. And they're the ones who are helping to test our hypothesis, our prototypes, our thoughts with people who don't necessarily work within Fidelity walls.
That's fascinating. And do you ask them, and then you must learn, what do sort of younger investors want to actually invest their money in and maybe spend it on too? I mean, what's sort of their goals, or how are they thinking about it? Do they like individual stocks? Do they like the funds? What have you noticed?
Yeah, so I think one thing that we've noticed over the past couple of years, and candidly, and maybe we even talked about this the last time we spoke, it really started with the pandemic,
Right.
I don't want to say like the good thing about it, but like a positive
Silver
thing.
linings.
I know, silver line, a positive thing coming out is that we saw more younger people engaging in their money than ever before, right? People were home, they couldn't travel, so they were really looking to things like the stock market and others. It's almost a way to engage themselves a little bit differently while they were in the home. And then putting another spin on this, like this was a time where people had to pay attention to their money because they weren't sure the outcome of it, right? So they had to make sure, like, do I have an emergency fund set up? Like, what does my student debt look like, before that got paused in the US? So there was a bunch of things that were going through their mind. So they leaned in more than ever. And then in 2021, we had the meme stock craze where, again, more than ever, younger people were paying attention to social channels, listening, talking on Reddit and other platforms. And then that caused them to want to get into the stock market. I think FOMO also played a little role in that too, Pamela. But so these two things really kind of kicked off a renewed interest, in my opinion, of young people when it came to their money, and specifically when young people got more interested in investing. So that's been a good thing. And we've seen tremendous growth in this segment in the Fidelity U.S. side. And I'm sure in the Canada side too, but we've definitely seen it on the U.S. side. And then what they're investing in, we do see.
What are they investing?
Yeah, that's a good question. So we do see younger people more heavily skewed on things like individual securities. A lot of times, and we hear this, we hear from teens, but we also hear from those who are older, that old concept of invest in what you know, right? Invest in what you know, the products that candidly they're buying in their day-to-day life. We sometimes then see that reflected in their individual portfolios. But we also see a great deal of younger people investing in things like index funds, right? Following index, not buy and hold, not necessarily, investing in individual securities. With teens, what's been very interesting, actually, going back to your question on that, when you look at the portfolio of the teen, and then you look at the portfolio of what their parents are investing in, there's similarities there. Where, you have some teens investing in those individual securities, most likely some of the stocks and the things that they're buying in their day-to-day. But then you also see similar type funds, which you didn't think a teen even cared about, Fidelity 500, for example. That's one of the top funds in this account because their parents are investing in it, right? So I think, in my opinion, I'm taking a positive spin on this too, that the parent is talking to their teens about some of the things that they themselves are investing in. And the teen is actually taking that advice and guidance and they're doing it themselves.
And at least to try it out, like maybe they'll go into it, but just as sort of an entry point. That's fascinating. And so sometimes maybe a fund, but I'm thinking even, some of the stocks are even really expensive. These are people that aren't necessarily making any money. Maybe they've been given a little bit of money and then ultimately they'll be making money. So how do they look at things that are maybe too expensive, but also they want to get going?
Yeah. So, I believe I said this earlier, and I'm just going to say it again because I truly, truly believe this. Like, we believe that everyone can and should be an investor. But I say that statement, it's equally as important we as a company make it easier for people to do just that, as well as bust the myths that you need to have a lot of money to get started, or, you need to be a millionaire to get that is not true. So what we've done over the past couple of years at Fidelity has done a few things. First of all, no account minimums to open, right? You don't need a certain amount to actually open the account that can allow you to start to fund the account and get started with investing. Other things that have been really important in helping people get started, especially when they might not have as much to do so, because shocker, younger people don't have as much money as older people, right? They haven't even reached their prime earning years until their 40s and 50s. So fractional shares trading, which allows you to buy a small dollar amount of the shares that are normally very difficult to fully afford if you don't have as much. So the launch of fractional shares trading has been amazing. We are big believers in things like dollar cost averaging. And as a result, we've recently enhanced our auto invest capability, in which you can choose a certain amount, just a small amount, to auto invest in a security, a fund, ETF over a period of time. We take that concept of set it and forget it, we apply it to the investment world, and people can invest without really having to think about it per se. Now, of course, we want them to, don't get me wrong. But, when you're auto investing, you're seeing the longer term goals in mind, even the events, of earlier in the week, it really helps when we built in some of those features to make it easy to get started. You don't have to put a lot. So these are some things that we've done to really hold ourselves accountable to the statement that I just shared, that everyone should and can be an investor. It's on Fidelity to be able to make it easy for them to do so.
Fantastic. What do you find? I noticed that we haven't, because we're talking about an entirely different segment of the population, different demographic, but we have not mentioned retirement because that's not probably what they're saving for. What are they saving for
So I'm going to bust a myth on you. In fact, we've actually seen they are, right?
They are.
Yes, they are. So let me give you an example. A product in the U.S., the Roth IRA, that is the primary point of entry of our younger individuals who are first opening an account at Fidelity. In 2023, that actually surpassed a standard brokerage taxable account as the primary point of entry. So that's been a really great thing. There's a renewed focus, especially with Gen Z, our younger generation, in things like retirement. They view retirement a little bit differently than the older generation for the millennials, who are a little bit more focused on things like experiences, right? So that's a really good thing to see. And then if you look to social channels, we've seen a tremendous increase in 63% increase in searching the term Roth IRA in Google. We've seen a tremendous increase in people using TikTok searching that term. So even though it feels like, oh, young, so far away, it kind of goes to the theme where more young people are looking at their money differently, investing a little bit differently, leaning into their money than before. Now, it's not all, of course, but we've seen some really good things in the data. We've seen the fact that Roth has now surpassed brokerage as that primary point of entry as an indicator that retirement is now a little bit more in people's mind. I mean, who wants to work forever, right? And so maybe that's part of the motivation, but in fact, we are seeing people care about retirement more so than before.
That's really, really interesting.
Yeah.
I'll just have you clarified. So the youth account that you're talking about, I mean, this is something that's not available in Canada, just to sort of.
I'm so sorry. I know y'all are mad. I apologize.
No, but it's good to know the innovation.
Yeah, maybe we can work on that a little bit, but listen, like we, yeah, to your point, a lot of the innovation that we leaned into, a lot of the learnings, they're applying to Canadian teens as well, right? And so, I just urge everyone listening, even though you don't have access to the youth account, there are other options. There's ways that you can start to talk to your kid about investing. So there are other ways. And hopefully some of the learnings that we heard, some of the things that we're seeing are allowing all of you guys to hear that too. And, any advisors out there, et cetera, this is a perfect way to start motivating you, the next conversation with your client, to start to talk to them. Hey, we know you have kids. How can we better help you help your children in the future?
So that's so helpful from the advisors that you're speaking to right now, from their perspective, what to say. Are you finding from the other side that younger investors, those starting out, are happy to get the advice? Like what's sort of your, how do you take the temperature on that?
So I think a few things. So when we looked at, okay, what are the primary sources that you believe can help you best with your money? As we've already kind of discussed, one of those primary sources is the parents, the trusted people in their life. Social is there, but then that was actually followed by advisors. And in fact, like our recent research indicated that over 60% of both millennial and Gen Z investors, they do believe that working with an advisor can be the key to financial success. So it's interesting. We are seeing that younger generations are seeing the goodness in working with advisor for help. Now, does that always translate to them doing so? Not necessarily, because they are younger, have less money, but because it's in their mind, I would use that as motivation. Like they are more than open to working with people. I think people love to use social, digital, that will never change. But when it comes to your money, having additional validation, having additional people to talk to, beyond your parents, beyond your family members, turning to advisor is a wonderful thing. And it's really great to see that our research is showing us that younger people are starting to see this as well.
This has been a very interesting risk off, then risk on, then risk off, then it's kind of maybe flat, we think, at the end of the week. But there's been risk has been a word used a lot this week. What is there a way to give kind of an average call on what sort of risk tolerance younger investors have? Do they have lots to lose it? I don't know.
Yeah. So, I wouldn't say on average. I think like any demographic, we do see it varies, right? I think the biggest thing with younger people, which is always very interesting to me, is that we'll go and do research with younger people. And, while younger people skew heavily more on the yes to would you ever skydive or jump out of a plane? They're all like, yeah, older people are more hesitant, right? When it comes to their money, it doesn't translate in the same way, right? So when it comes to your money, when we then ask these same people who will go jump off, and no offense to anyone who's gone skydiving, who will go jump out of a plane, if you had to lose about 20% of your money in the stock market, could you handle that? They're like, no, 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 no. So it's very interesting, Pamela, when you look at the risk spectrum. And again, I guess not a complete surprise. How you evaluate risk in your day-to-day is very different when it comes to your money. And with a lot of younger people, I think what we do see is that the spectrum varies. And so candidly, a lot of our education, though, especially when it comes to investing, is that even though you are more risk averse, right? Even though you don't want to lose your money, we never want people to do that. One, because you are young, you're playing the long game and you can weather some of those ebbs and flows of the stock market because they're always going to happen. So that's number one. Number two, a lot of the young people that we're talking to, they're not putting a whole lot of money in the stock market to begin with for all the reasons that we've already discussed. So those are some of the things that, again, we can never take away the feeling really that people feel and who they are in terms of risk. But educating, sharing some of the things that I just said, that's at least a way to try to comfort people when it comes to their money, educate them. Investing is not gambling, that sort of thing. So we spend a lot of our time educating on exactly the points that I just touched upon.
Some of the tools that you mentioned, so providing some of this information, making sure that there are tools for them to access. I mean, I'm assuming they include podcasts, webcasts, clips, like little quick instructional things. What else is there? So if we went on, give us a bit of a sense of what kids and younger investors would see.
Yeah, I think you hit the nail on the head, a lot of them. Younger people, I think sometimes people, we just got a lot going on and sometimes we have short attention span, right? So I think a lot of things that we've seen works well are those short, may I say, TikTok inspired video clips that really get to the point. And, a lot of influencers candidly have done a good job using that to their advantage and educating the youth, right? They can explain what dollar cost averaging in 15 seconds, and they can do it really well, usually with a little dance, right? So definitely we see younger people gravitating towards, those quick hit clips. We're seeing them, looking to social, posts, quick facts. We're also seeing how they can dig a little bit down and specific articles on education. We kind of touched upon this in terms of some of the content that we put out earlier in the week with the markets. Some people needed that deeper dive. They needed that additional reassurance. Something that is interesting, though, and this is a big learning for us, is that, although we know that sometimes the quick hits, those brevity is kind of more impactful when it comes to younger people. When it comes to people wanting to open an account for the first time, they actually need more information. So that was a learning. We did a test where we cut down the amount of information on an account, and then we had full information, and the one with the full information won. So
that actually leads me to something I was hoping to close with. The person-to-person meeting. So lots of other pieces in terms of communication tools and the way we communicate are important. How important is still the person-to-person meeting?
I think very important. I don't think you can ever replace a human, ever. And I don't think you ever will, right? I think there's certain times when digital will win. I think there's certain times, I know I do it, I avoid picking up the phone at all costs. But at the end of the day, when it comes to your money, at the end of the day, when you need comfort, advice, guidance, or candidly I'm going to celebrate with, you're going to turn to a person. And we're seeing that with younger people.
Kelly, Lannan, it's a delight to see you again and hear all of the new and innovative things that you're putting in place for younger investors at Fidelity. Thank you for joining us.
No, thank you so much. This was so fun. And bye, everyone. Have a great rest of your weekend.